Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the euro currency. So here, as you can see, last week the price action was not very superb. So you can see it mostly stands in a very tight range. And currently we have the mixed situation. So first of all, it is obvious that we have the rising wedge pattern that, well, classically is treated as the bearish, but in the modern market it could be not just bearish but also the bullish when market shows the straightforward fast upward breakout. Sometimes it happens. The classical price behavior after the wedge is more common, and you could see it more often in the market, when the market just shows indeed downside breakout, shows deeper retracement, but sometimes the direct upward breakout also could happen. In the current circumstances, well, I think that we should better stay aside of the market for some time, for a few sessions, because of the few indirect signs that I do not like on the market for taking the new long position. First of all, what I do not like is, of course, the wedge itself is potentially bearish, but also take a look. We have the divergence here that suggests possible downward action. And we keep an eye on a possible reverse head and shoulders pattern that theoretically could be formed still. Besides, on intraday charts, we have two fast downside action, inability of the market to break resistance and reach finally the COP target. This is really not good thing, just because currently we have no barriers. Market already has broken 6-minute resistance. It's not at overbought. It actually has no resistance except maybe this previous top. But when the previous top could become the just unbreakable resistance, so it happens very, very rare. At least it is possible for the market to show a kind of the Russian rings hit the COP, but this hasn't happened. Well, it makes me think that probably some bearish orders exist maybe around this area that keeps market right at the same level as the previous top, or something of that sort. So personally, for me, this is a bit personal, so you could act differently, and later in the video I will tell you how you potentially could trade the current situation. But for my personality, it would be better to stay aside and wait for the clarity, because if market will drop and starts to form the hand and shoulders, we will get evidence that market is preparing for upward continuation, because this will be the bullish pattern. Second, we will get the clear point where we could take the position. It's 1975 area, as it stands in harmony to the previous lows, right here where the left arm has been formed. So it means that right arm should be also around 120, 1975, somewhere in this area. If somehow we will get the straightforward upward breakout, then we will try to enter on some pullback. That will be much safer than trying to gambling here and trying to take a position. At the same time, if you prefer to be possessed on the market, if you know in general the direction, but you're not sure when it will start, well, in this case, you could try to take the position, but very small value, something around the 10, maybe 15% of your normal common trading volume. That will let you to be possessed on the market, but at the same time you will have no risk. If even market will drop right to the 1975, your potential risk will be very small, because of your position value also will be very small, and adding more right here, your average will be slightly higher. So this will be acceptable solution. But if it's really necessary to your mentality. So on the 4-time frame chart, that's our wedge pattern. Here we also have the divergence, what I also do not like. And take a look, formally we have actually attempted to break the wedge. So here's market trying to do this once, second time, but both times it was unsuccessful. As I said, this is look a bit curious, because of the lack of an absence of any resistance above the market. So this is also not very good sign that makes me to stay aside for a while for taking the long position. Finally, take a look at this recent sell-off. It was relatively strong. which is also not good for upward continuation. On the hourly chart, you could see that with our butterfly, take a look here, was attempt for the market to push up from the 618 support area. So market has dropped, trying to form the bottom of the wing, but was not able to stay above the 618 level and dropped more, almost right back down to the lows. So market stands around confidence right now, 2171. But, well, it is too deep retracement for the butterfly. And in general, we do not see any signs of an attempt to show the recovery. Although this butterfly is still alive, but it's really tricky moment for possessing by this butterfly, by this pattern. And that's the third reason why I also do not want to take the position right now. So, generally speaking, I would suggest that if it's possible to you, it would be better to wait and see what will happen. But still, if you would like to make some trade somehow, be possessed on the market, what you particularly could try to do. For instance, you could try to take the position based on the butterfly. Because formally, and in fact, market pattern is still alive. And here you have a unique chance to place stop very close. So in fact, what you do is just to place stop below these lows, because that's an validation point of the butterfly. If somehow, maybe some news will be released, maybe something will happen, the market will start jumping up, well, that will be the perfect trade. You will get the perfect entry with a very small potential loss. Alternatively, if you have the bearish view, you could use trying to place the stop sell order just below the lows. And if market will break it down, you will be possessed for a downward continuation. And also what you could do, you could combine both of these trades, for instance. But why I do not follow these trades by myself is just because they are based on some anticipation of the price action. So because on the patterns, we do not have clear direction. We do not have clear patterns or signs that definitely tells us that we're going upward or downward. The signs and patterns on both sides are weak, and it's not enough to form a clear context on the market. That's why taking on any position currently is a kind of the anticipation and gambling. Maybe they will be successful, but it's not enough to recommend here in the video. So this choice is up to you. Currently, patterns provide not bad situations because they let you to place very tight stops, and your risk will be very small. So you could try to do this. But in general, these trades are not suitable for our recommendation for video analysis by the reasons that I just have mentioned. So for majority of our followers and informers, we think that it would be better to sit on the hands for 1-2 sessions maybe and see what direction finally will be set. I think that euro will not need too many times to choose the direction. So it probably will be resolved relatively soon, Monday, Tuesday maybe. So we will get either the downside breakout and deeper retracement, or market will start accelerating higher with an attempt to break the 2250 area and proceed higher to the targets on the higher time frames on the weekly and the monthly.